Now, President Cyril Ramaphosa says the third annual South Africa Investment Conference has put the country back on track to secure the ambitious 1.5 trillion rand target for 5 years. He was punting the government's economic reconstruction and recovery plan as the investment conference concluded this week. He says that so far, mining has seen the greatest flow of investment from the commitments made at over 63 billion rand. But long-standing hindrances such as administrative and policy uncertainty remain weaknesses under which businesses operate. These issues follow on the back of the ravages of the COVID-19 pandemic and, of course, the lockdown restrictions as well as a recession. Economist Richard Downing joins us now for an overview of what went down at the investment conference this week. Richard, thank you for your time and thank you for joining us on Weekend Dawn. Let's start perhaps by talking about the latest ratings agency downgrade. What does that mean on the back of the investment conference that took place a few days ago?
Well, I think what we see now is actually that what the Minister of Finance actually pointed towards in the medium-term budget speech is the problem of actually of public finance. And I think it was expected that the rating agencies won't increase our ratings as such. And actually, we were downgraded by two of them, like Moody's and Fitch, downgraded from where we were. And it's only actually Standard & Poor's that actually downgraded us before, that actually stayed put in terms of their downgrade. So it actually means the cost of financing will increase to some extent, especially to the government as such, and all related financing institutions that is also related to government financing might be affected by this downgrade. So it's not good news as such. I mean, but it was to be expected, and I hope people understand now where we are at the moment, because it's very important. We don't generate enough capital within South Africa to finance investment that you mentioned, and it's actually an imperative actually to get the foreign investors to buy in terms of where South Africa's economy is going, what the direction of policy is, not only policy certainty, but also the direction of policy. I think is very important, and I think this is a call up for us to actually view things in perspective. And the Minister of Finance has already indicated some frustration in terms of where we're going, and in terms of what he announced in the budget speech, the medium-term budget speech, and actually the sort of things being put on the table afterwards. And still it seems that people don't really understand the seriousness of the situation in terms of public finance and also households in South Africa. I mean, huge unemployment at the moment. I mean, even if you count back the people that is actually not looking for jobs anymore, you get to a really big unemployment figure that actually reflects on household income, which is also a problem. So there's only one way for the economy to beat this sort of ratings, and that is actually to restructure your economy, especially your public finance in terms of the total public sector. That is now central government, provincial governments, local governments, as well as your SOEs. I think that's the way to go, and perhaps we should take it serious now and start moving very fast. The investment conference actually is a good thing. I think it's also very necessary to have the level of capital stock to have a growing economy. And I think what we've seen in the past, we're already investing the private sector about 700 billion each year just to keep track in terms of your capital stock. And so the 1.5 trillion over 5 years actually amounts to about 300 billion per year, which we hope is additional to what we're actually already investing. And that is the main issue, and to make sure that that investment is actually rendering a return, and the return we must see in terms of economic growth. Otherwise, it is just an effort again to spend money on capital goods without creating assets in the economy for growth.
Let's talk about the investment conference and the pledges that came in. At least 50 companies made investment pledges. But does that really translate to actually helping the economy immediately, or is it more of a long-term kind of pledge for us?
Well, I think, first of all, one should use a proper system of actually identifying your projects. And hopefully that was actually done, especially by the private sector, because you must identify loopholes in your system in terms of where you should invest. And I think they've done their homework to some extent, the private sector at least, because they are looking at returns for their shareholders. Otherwise, they won't do this type of investment. And they must have policy certainty and a direction in terms of where policy, economic policy might be going and the economy might be going. So it's very important for them, actually, especially in the private sector, to move in the right direction. But also in the public sector, that investment is critical. Public sector plays an important role in the economy, and therefore it must concentrate on service delivery and not merely spending the money. I think that is the main issue, and especially on your local government level, where all business actually in final instance operate. That is very important to have those projects being well received and well developed and well implemented. I think, and the President has also indicated, that implementation is very important. But we must remember this is only the construction phase in terms of the investment. The proof in the pudding comes after you've constructed this infrastructure in terms of the operational phase of those projects. Are they maintained properly? That type of questions. Is there enough institutional capacity to run that type of projects? I think that is the main questions that we'll see over time how it develops.
And in terms of industries and private companies that have pledged on this projected 5-year recovery plan, do you have an idea on which industries are the ones that will add to boosting this recovery plan?
Well, I think, what we know now in terms of energy supply, it's very important actually to broaden our scope in terms of energy supply and to move away from only one sort of source of energy supply. And therefore, I think that investment in that area is a very important one. The other thing is, we, in terms of our railroads, in terms of international trade, that type of investment in terms of harbors, your railroad security, in terms of law and order investment. That is a critical issue. We saw again yesterday and the day before perhaps that there's a major problem in terms of law and order. And I think one of the preconditions for any investment and for any economy is to have a stable type of environment in which you invest. So the investment shouldn't only concentrate, on economic type of projects, but it's also in terms of the public sector. That type of investment is very important to make sure you create an environment that enhances even more investment by the private sector, which is necessary. And I think the 1.5 trillion is only the start to this. If we want to really get to growth of about 3 to 5%, we'll have to do more than only the 1.5 additional investment over time and not just stick to this 1.5 trillion pledges that we have at the moment.
Now, let's talk about these downgrades and how the economy had or is still trying to recover from the lockdown restrictions. Does this still make South Africa a prime investment destination?
Well, I think, what the pandemic has shown us and the lockdown process was actually a radical intervention in the economy, trying, to quell the pandemic, which one can understand for health reasons. But it actually did a lot of damage, actually. As soon as you start to try to control the economy in a way that isn't market related or such, as we had to, of necessity, do within the lockdown process, it's a different story. And I think the damage we will see, and I think some of these rating agencies point to that problem, that we might experience structural problems going forward, emanating actually from the lockdown process. So it will be very cruel actually to the economy to again go on to another level of lockdown. One should be very selective and manage risk in terms of this pandemic very, very carefully. And I think the economy is not nearly at levels we would like it to be. And as we go forward and for this investment to really take root and have results as such in terms of the economic growth and employment especially, I think it will be important, to make sure your investment is actually a broader scope and that you create a structural situation in South Africa from which the economy can grow. Because make no mistake, even your big economies that could actually finance this whole pandemic from the fiscus has had some problems. And South Africa has already been in a problem, in a deep recession already, in the first and second quarters. Now, the third quarter, we might get out of the technical recession, but it doesn't mean your economy is moving ahead. It's still by definition in a very bad spot. So it's important actually to move away from the levels of activity that we have now and to increase that levels of activity, and especially to enhance employment and that type of structural issues, and especially in terms of government, to create through economic growth the revenue that's necessary to adhere to some of these really the priority social issues that we must attend to.
Richard, what about government employee pension funds? Should they be invested at a good place for maximum returns, and where would that good place be?
Well, it should be, I hope. But you know, the government employees has got a defined benefit system. If you retire, actually, and your pension fund can't fund it, I mean, you must actually sort of make provision in terms of your budget. So it is actually not a good thing to be in terms of you start using your pension fund money for other purposes. So it's important actually to keep that pension fund ring-fenced to some extent. And use it very, very sparingly, you know, in terms of, because we must see pension fund as a form of your domestic saving. And if you start using your pension fund for recurrent expenditure, for instance, you are actually destroying savings. You are destroying capital base, and that you could use to finance your capital projects. So that is the sort of danger in terms of start moving on to that type of financing. If you could perhaps use it for really long-term capital purposes, it's something different, and make sure those capital investment actually have good returns for your pension fund. But if you start using this just to prop up your budget and to keep on using money from your savings, you're already in trouble. And we must remember, during the lockdown process, a lot of small businesses actually already delved into their savings pool to keep afloat. So there was a huge cash flow problems in terms of some of these small businesses. Some of them actually went down. There was no option for them to recover. So your savings pool, domestic savings pool, has already diminished in South Africa. And, you know, one should be careful of using ratios. If you use your savings ratio to GDP and both of those numbers go down, your GDP and your savings, then your ratio might stay the same, but it's quite a different level of savings that you're sitting with. So that is the problem. Once start moving into your savings pool for really financing deficits as such, and especially government deficits, and to keep recurrent expenditure going or salaries going, and to finance increases and some SOEs that doesn't make it actually economically anymore, then you're in real trouble, and you're heading for another sort of downgrade as such by these rating agencies. And you might even have a situation then later on, if you don't really adhere to the issues they are making you attending to, you could land into big trouble in terms of your public finance. And I think the Minister of Finance has already indicated that. And therefore, we you know, actually the way he's looking at things. I think, and I hope that all partners in the economy, or all role players, actually take heed to what is actually really the situation.
Richard Downing, we'll leave it there. Thank you so much for your time. Economist Richard Downing chatting to us about the SA Investment Conference, which wrapped up this week, aimed at attracting investors to the country.